Following the release of the US June CPI rates, the continued weakening of the USD following the lower than expected CPI rates allowed gold to capitalize and move to higher ground. In this report, we aim to shed light on the catalysts driving gold's price and assets' future outlook. The rise of gold's price was all but evident during last Wednesday's trading session, when the US CPI rates were released. The US CPI rates were indicating easing inflationary pressures in the US economy, coming in lower than expected by market analysts, jolted the bullion market as the greenback further weakened. The lower than anticipated CPI rates could be perceived as an indication that the Fed's ambition of continuing to hike interest rate in 2023 could be reaching a slight snag by challenging the bank's resolve to continue on its current rate hiking path in the face of easing inflationary pressures. Therefore, the possibility of fewer hikes in the future weakened the greenback and as such allowed gold to capitalize, once again highlighting their inverse relationship. Lastly, we highlight the release of the US core retail sales rate, which at the time of this report have not been released. In the event that the retail sales come in lower than expected, we may see the pressures further capitalizing on a weaker greenback, whereas should they come in as expected, it may provide support for greenback and as such weakening the price of the precious metal. According to Bloomberg, the UAE has blocked one of its largest gold refineries from delivering into Dubai's gold bullion market. Interestingly enough, on the Emerald's Gold website, the statement released by the company claims that this is only a temporary suspension of its UAE good delivery and accreditation and that the situation will be rectified, in addition to stating that they have not lost their trading license. Nonetheless, should the suspension be prolonged well into the future, we may see a reduction in overall supply of gold being released into the market as the refinery capacity is taken out of action. That means less can be processed and released into the market, resulting to potential shortages in the long run, which may provide a minor form for support in the price of gold, given a scaling down of a process in the supply chain. However, despite the interesting development, we do not expect this to take a predominant role in guiding the price of the bullion. Various media outlets have been heavily reporting that Russia, via RT, a government-owned news broadcasting agency, has confirmed that the BRICS nation will be discussing the adoption of a common currency that will be backed by gold during the next summit in August. In the event that this is formally confirmed by the group during the official summit, it may have a significant impact on the price of the precious, as the return to the gold standard, similar to one of the Bretton Woods system, could drastically increase the price of gold. A gold-backed BRICS currency could lead gold to new all-time highs based on the fact that following the removal of Russia from the SWIFT banking system, many countries have started to look for the alternatives to the greenback, which is currently the world's reserve currency. Therefore, by introducing the gold standard, it may set the stage for further nations to ditch the greenback in favor of a gold-backed currency, which may have less volatility and economic ties to the dollar, thus potentially sending the price of gold higher. Thank you for watching.